寿的著名讲师，他曾经在2005年的时候成功预测到了美国房地产市场的泡沫行情，也在2007年的时候成功预测到了美股熊市的爆发。从此以后 ，James Stack 的言论备受美国各大媒体的追崇。我们今天也对当下牛市的问题对他进行了专访。
Yes, I would love to. Hello to ChineseInvestor.com. It's great to be on. Thank you for inviting me. There's a lot of macroeconomic evidence, economic indicators that are telling the U.S. that we are actually on a very strong footing in the U.S. economy. One of those pressures is going to be on the Federal Reserve to normalize interest rates later this year.
Where can we see the potential warning flags?
Some of the warning flags that you look for in an aging bull market that would show you or confirm a potential market top would be in divergences. What I mean by divergences is fewer and fewer stocks participating. That would be the advanced decline line. Right now, there's no warning flag there. Another area to watch are bellwether stocks, those stocks in sensitive sectors that tend to peak ahead of the broad market. And right now, our bellwether index is looking pretty toppy. It looks like it might be peaking. The other thing that I'm worried about in the U.S. market in particular is the fact that the utility average, the Dow Jones utility average, peaked last January and is down 10%. And the transportation average peaked last December. The Dow Jones Transportation Average has not hit a new high in 2015. It's those kind of divergences that, as they become cumulative, tend to cause us to move to a more defensive or cautious stance.
What is margin debt? Why it makes you nervous now?
Margin debt is money borrowed to buy stocks on margin. And it only goes up very rapidly when traders are very confident and you have that extreme optimism that they've got to take part. When you see margin debt soar, and when it hits a peak, very often the market will hit a peak at the same time, or it will hit a peak shortly after. Margin debt has risen exponentially over the last couple of years. It peaked in February of last year. It looked like that might have been the peak, but it's risen in the last couple of months. I think the jury is still out on whether or not that is the peak for this cycle in margin debt. But if it starts falling sharply, then it could mean that the peak is behind us in the bull market. Bull markets don't die of old age alone, but as they mature, they do become higher risk. And one of the things that does make them higher risk is the gradual increase in valuation. We do have an overvalued market today, and at the same time, it's probably one of the most interest rate sensitive markets in history. I know the Federal Reserve is worried about that when they start raising rates, and what we'll have to do is see how nervously the market reacts when that occurs.
Most importantly, how investors can adapt their investment strategy in now situation?
Yeah, in an aging bull market, you can take certain defensive measures to help protect your portfolio from what might happen if a bear market strikes. One, I think, first of all, you have to look at overall allocation. You don't have the same strategy in a seventh year of a bull market as you do in the first year or the first half. And it's okay to have a higher cash level today. Our cash level we've raised to, almost 25%, almost 1/4 of the portfolio. That is where we feel more comfortable, and it allows us to sleep easier at night. Secondly, you focus on more defensive sectors. That means you take profits in the financial sector or the consumer discretionary stocks, and you move them into healthcare stocks, staple stocks, or even energy stocks, because I do think that oil has hit bottom now, and a lot of the energy stocks are great buys out there. They tend to perform better in a mature bull market.
Which sectors do you have examples?
Well, yeah. If you look at specific stocks, Chevron is a great company. If you look at some of the, of course, I don't do the portfolio selection. Our team does that. But I think if you can go out and look at any of the ETFs in the energy, healthcare, and also the consumer staples, those things that people have to buy rather than the discretionary stocks people can choose to buy or not to buy, those tend to be the higher risk stocks in an aging bull market or when a bear market strikes. The biotech is a high risk investment right now. It's an exciting ride. I know investors love it. Traders are on it. But at the same time, when everyone's jumping on the same bandwagon, I've had over 35 years in this business, and that I know that when everyone's climbing on the same side of the fence or climbing on the same bandwagon like the biotechs right now, that's time usually that I want to be stepping off.